Hi everyone, welcome to You're Not Alone. Today I'm going to be explaining a bridge loan. This will be helpful for real estate agents as well as borrowers who want to know how this product works and whether it's a good fit for their situation. I'll be going over all the details, but a brief explanation of how this loan works is that it allows a borrower to purchase a new home before selling their existing home using their equity without including any contingency on the offer. The bridge loan is used to pay the down payment and closing costs on the new home, and then once the existing home is sold, the bridge loan is paid off. So let's get into the meat of this. I'm going to explain who a bridge loan is for, what the borrower qualifications are, how exactly it works, and stay until the end as I'll be sharing a scenario with actual numbers that will help you understand it even better. So what kind of borrower is this loan best suited for? This is a borrower who owns an existing home with equity and is looking to purchase a new home, but doesn't have enough cash for the down payment and closing costs. With so many people having equity in their home right now, this program can be quite useful for people looking to buy a new home. Some borrowers may have assets such as stocks or bonds that they could sell for their down payment, but prefer not to do this if they don't need to. A bridge loan allows them to use their equity instead so they don't have to disrupt their investment accounts. Also, as you know, borrowers are not allowed to borrow money from friends or family. So again, this allows the borrower to legally access the cash they need for their down payment. The qualifications the borrower must meet to obtain this bridge loan are the existing and the new home must be the borrower's primary residence. They need to have a minimum credit score of 680, and the borrower's debt to income ratio must be no more than 50%. That includes their existing mortgage, their new mortgage, the bridge loan payment, and any other debts that they may have. And I'll explain all of those a little bit later in more detail. The bridge loan works by combining a traditional conventional loan to allow the borrower to buy a new home before selling their existing home. It's one application for both loans. Only a conventional loan can be used, no government loans are allowed. The bridge loan is a temporary 6-month loan with a possible 6-month extension that is used for paying the down payment and closing costs on the new purchase. There's an interest-only payment on the bridge loan every month until it's paid off. The borrower can use up to 90% of the combined loan to value of the existing home. That includes the current loan balance plus the amount of the bridge loan. For a loan less than or equal to 80% CLTV, there's a 4.5% interest rate, and for a loan greater than 80% CLTV, there's a 5.5% interest rate. The maximum money that can be borrowed is $250,000. The process for obtaining the bridge loan is very straightforward. It begins with the normal mortgage application and pre-approval for purchasing the new home. Besides reviewing rates and other variables on the conventional loan for the new house, I will also run numbers for the bridge loan and provide the borrower with how much bridge loan they can access. A drive-by appraisal is ordered for the existing property, which the lender will use to confirm what the existing home is worth and verify the accessible bridge loan amount. The bridge loan will be used at closing to pay closing costs and the down payment, and if necessary, the borrower will pay any additional amount that the bridge loan doesn't cover. When the existing home is sold, the bridge loan is paid off. Costs associated with acquiring the bridge loan are pretty minimal. They include a $500 origination fee, minimal title fees, and the drive-by appraisal. This typically amounts to about $1,000. Of course, there are also the monthly interest-only payments the borrower will make until the loan is paid off as well. Okay, let's go through a quick scenario so you can see what the numbers actually look like. So Susan and Bob have been married for about 10 years, and with kids, things are getting a little cramped, so they're looking for a couple of extra bedrooms. They've spoken with their real estate agent, and they're confident that their current home can appraise for $500,000, and their current mortgage balance is at $250,000. They found a home that they love, but the sellers aren't accepting contingent offers, and they don't have easy access to cash for the down payment and the closing costs. The sell price is $700,000, and they want to put 20% down. With $5,000 in closing costs, that will be a total cash to close of $145,000. Now let's make sure we pass the first test, which is that the combined loan-to-value ratio must be less than 90%. We do that by adding the current balance to the total cash to close, and then dividing that by the existing home price. And that comes out to 79%. So we're less than 90%, so we're good to go there. And with that 79% CLTV, that puts our bridge loan interest rate at 4.5%, and our monthly bridge loan payment of $544. Okay guys, we are almost done here. We just need to make sure that they pass the last test, which is that the maximum DTI is 50%. So we are going to add up their current mortgage payment, their new payment on their new house, the bridge payment, and any other debt that they have. And then we're going to divide that by Susan and Bob's total income of $13,500, and we get 47%. So yes, they pass the max DTI test and they are good to go. Great job hanging in there, everyone. I know these are a lot of numbers, but don't worry, you don't have to do the math yourself. I will do that for you. All right, everyone, I hope that was informative and answered all your questions, but if I left something out, please let me know and I'll respond very quickly so I don't leave you hanging. If you think this program could work for you, a friend, or a client, please reach out to me because I would love to help you out. Hope you guys have a great day.